Good evening and welcome to the Accendo Trader Group. This is our weekday trading plan for February 24th, 2010. Our website is blog.accendotrader.com, where we put together effective video technical analysis trading plans on a daily basis. A trading plan keeps us focused and disciplined. It keeps us abreast of what's coming down the market for our open positions and as we scan for new trades. It also cuts down on our time, research time, so we have time to spend with our family. The day that was, well, we had a market rebound after the single worst trading session we've had in a couple weeks, percentage-wise. Initially, there was a little down move based upon the disappointing results of the January home sales. The new home sales for January fell 11.2%, which month over month is the worst that we've seen since January of 2009. Also, the market had a knee-jerk reaction to Chairman Bernanke's prepared statement. In their prepared statement, he basically indicated that the FOMC anticipates the pace of the economy to continue to moderate recovery and also the inflation to remain subdued. And of course, they're going to do whatever they need to as far as tightening monetary conditions to prevent inflation. So because they start talking about tightening and preventing inflation, the dollar came under some pressure, although it rallied into the close. 9 out of 10 of our sectors ended in positive territory, and all 3 of our major indexes ended in positive territory also. No real earnings to talk about today that moved the market. Similarly, on the upgrades and downgrades, we had no stocks really to talk about, major stocks. Tomorrow, as usually, it's Thursday, so that means we have initial claims. We also have durable good orders tomorrow also. Of course, we're waiting for Friday's GDP number, but we do have some economic data coming out tomorrow. As far as earnings concerned, nothing really of major concern. We do have dry shipping for transportation sector, Novell tech sector, wind, the resort and casino sectors that you might want to be concerned of, but really nothing that's going to move the market. We do have some splits that are out there, but let's go ahead and take a look at today's action. So first, let's go ahead and get an overview of the market. We're looking at the website FinViz. And here we can kind of see that the market went up to about 10 o'clock. Then we had that new home sales, and we went down, and then we rallied from there. A little bit of knee-jerk reaction from the Chairman Bernanke statements. But overall, obviously, the market ended up. We can see that over 60% of the stocks were advancing. We had almost 94% of the stocks making new high. And we can see about 50%, a little bit more than 50, above the 50-moving average. And about 70% of the stocks are above the 200-moving average. And of course, when we look at our little Rubik's Cube over here, we can see it's nice and green, which is certainly good. Interesting to see what's going on here with Google. But our financial sector down here is all green, and that typically means when the financial sector is green, the market is green. So let's go ahead and take a look and see what we can see on today's internals, our volume spreadsheet, and we can see that today obviously the volume was down today. Volume was down big time on the NYSE, down on the NASDAQ as well. We did have bullish breath. We did have more up volume than we have down volume, and we have a respectable new high, new low number. It's nice to see stocks are still making new highs. More stocks are advancing compared to declining. What's also interesting, though, is the VIX is starting to come back down. We can see what happened yesterday. Again, was yesterday being a down day, big down day, strong bearish numbers, and a high put number. Now we have less pulls. We have more puts versus calls yesterday. That's options. Today we have less. So overall, we saw the market rebound a little bit, but of course we did not get the volume to back up the up move. So here we are. What are we looking at? We've got the Dow Jones. First thing we want to see is, again, our support from November and December in this consolidation range. You can see that we found support there. We also found support here in the 50-moving average. That's certainly well and good. The good news of the up move today is that if we continue this up move, that means we have a swing low, a higher low, a better way of saying that, and so that will be good for the bulls. However, if we were to reverse down, we're still looking at a swing low as far as a higher low, and reconfirming the downtrend. So what we're looking at is a couple things. You can see we have a little action going on here at 10,400 right here. That's one thing we're going to be looking at. The other thing we're going to be looking at is 10,500. 10,500 was the top of the consolidation in November, December. So that will allow us to break there and then to go test the January highs. So, obviously we want to put alert above these wicks from earlier this week, Monday, last Friday, and then we want to put an alert around 10,500 to catch to see if we're breaking out of the consolidation previously set in from November and December. On the Nasdaq, we see primarily the same thing, except instead of finding support at the bottom of our consolidation for November and December, we're actually seeing it at the resistance from November and December, and we're finding support there now. Look how nice it matches up with this gap up right here. So that's certainly good, but the same thing here. We want to put alert right here at 2250 to see if we're going to continue on and test the January high, or again, is this just a higher low, a lower high is what I'm trying to say, and we're going to go lower. So again, nice recovery, a little bit lighter volume. Let's see where we'll go tomorrow, especially as we're anticipating Friday's GDP number. Switching off to the S&P 500, ta-da, we see the same thing. Here's our consolidation levels, right here around the 10,080 level. There's our support, and then our resistance around the 1120 area. So again, put an alert there around 11:15. Are we going to break this consolidation and go test the highs from January? Now, a couple things that's interesting. I'm going to switch over to one of my longer-term charts, and you can see that the 500, this purple line, is the 500 moving average. So we did find some support in there. Also switch back to the Dow so you can see that. Again, finding support at the 500 moving average. Not too often that the 500 moving average comes into play, but we see that with the Dow in the S&P 500. Nasdaq, it did not come into play. Finally, on our monthly chart, you can see we pushed our way right back to the 50 moving average, so we're holding up on resistance here on the Dow. The 50 moving average is holding up as resistance. So again, as we test the January highs, we would break the 50 moving average, which would give us some room to run up to 10,900 level. But again, the 50 moving average is acting as resistance right now. As far as the S&P 500, you can see we're actually a little bit lower. So again, the 50 moving average is acting as support on the monthly chart. Now on the Nasdaq, the 50 moving average is going to act as support versus resistance as it is for the Dow and the S&P 500. And you can see again we have a nice rising three candle pattern there for our chart pattern folks. But we can find that resistance at this 2300 level here, matching up with the swing highs, swing lows here. So we want to break there to really we're going back and testing some of the highs from 2007 if we can break that 2300 level. Okay, let's finish off with our education portion of our video. And we are on to a new book. We're on to Trade Your Way to Financial Freedom by Van Tharp, Dr. Van Tharp. And so we are finished with Trading in the Zone by Mark Douglas. And he starts off his book talking about his two objectives. First of all is to help you find the secrets to the Holy Grail. And the second goal in his book is to help you identify a winning trading system that fits you, that fits your trading style. And he goes on to say that basically the most important factor to your success as a trader is you. And that really ties in as we switch over from Trading in the Zone to talk about the psychology of trading. And so now we're talking about, before we were talking about the psychology of trading, and as we continue on with that, now we're going to actually focus on, in this book, talking about trading systems. But again, it's still you. You can get a system, but if you're not able to enact that system the way it's supposed to be, then it's not going to be a winning system for you. So you still have to find about yourself, your risk tolerance, your goals, all of that factor into a winning trading system for you. Someone else's trading system was their trading system. You have to find a way to incorporate into your trading style. As you guys know, we got a great futures trading room, 10-day trial for $30. Monday that made $1,000 using 3 contracts. Tuesday over $1,000 using 3 contracts. Log on in to see what we did for today. But obviously we've been very profitable. And if you're going to trade futures, we got a broker that has intraday e-mini margins as low as $300. If you sign up through us, there is a 20 free contracts, which can be up to $200 right there. And we even have a demo for you to try out them before you actually sign up. Great futures charting platform for you. And we have a future trading plan to help you really make that transition from stocks or options into futures, and explaining why the leverage of futures is the best. So guys, thanks for watching. as you know, we're still working on getting the podcast back up as I'm getting my hard drive fixed. And just want to thank everybody. Make sure you realize you can't lose your money. Trade at your own risk, and I'll see you next time.